Hi, everyone, and welcome to the TimingResearch.com Crowd Forecast News, episode number 326 for January 3rd, 2022. This is our first Timing Research show of the year, and we are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I've arranged for Michael Filighera to join us again. So we're going to get a Fibonacci update for him from him for the start of the year. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. Hey, welcome everybody to the new year. We've come out here swinging. Markets are very active here today, up and down. And so we're going to go over what's happening and also what we think could be happening in the future here. With us today is Michael Filighera. And Michael, I want to give you a second here to give a quick background and what's going on at your company.
Sure. And good afternoon, everybody. Again, my name is Michael Filighera. My two websites are logicalsignals.com and tradershelpingtraders.com. And my background is that I have been trading the market since 1979. I was an options market maker here on the Pacific Coast Stock Exchange in San Francisco, but I've also traded in London, in Amsterdam, and in Germany, and then came back to San Francisco. Currently, I focus on day trading, and my focus is on the NASDAQ and the S&P.
Okay, sounds good. Let's get into what's going on. On Monday, we always start out with some basic questions. First one is for where we started today at the opening, and I'm using SPX as a reference point. We opened at 47.78. How do you feel between now and Friday? We've got Fed minutes on Wednesday. We've got a jobs report Friday. So between now and we got a OPEC meeting tomorrow. So
Right.
Lots of action. With regards to 47.78 as our reference point, up or down, sideways, what do you think by Friday?
I think a little bit of all of the above, but
Right.
I do feel that the market will be higher. I think the S&P will be higher than where we started today, and I believe that it'll be above 4,800. And unfortunately, because of the volatility in the markets currently, it only carries a 50% probability. You have to keep that balance in there on a 50-50. And that doesn't mean that the market won't get above 4,800.
Right.
But it just we're confining it to the week.
Yeah.
And so
there is some news hitting that are wild cards.
Yeah.
Although, starting out today, we have to admit the first thing that really hits your screen is the fact that the 10-year has jumped up above 160, 162 or something.
Right.
And that's a pretty good jump up. So if that's the theme of the year, then obviously, it'll be interesting to see how things pan out.
That's true.
With regards to, I have a question for you right off the bat here. Stores of value seem to be not doing that great. Silver, gold, Bitcoin, that kind of stuff. But base metals and industrial metals like Cleveland Cliffs seems to be getting a bid. Do you think there could be a little bit of a theme where the stores of value could have trouble, yet the base metals of XME, which is an ETF of all this stuff, and Cleveland Cliffs, which has a whole bunch of them, could those areas outperform the precious metals and the stores of value this year?
They could, but let me add to the conversation from a little bit of a different angle. I think that when we talk about a storehouse of value or store of value, which gold remains, silver does participate, platinum, palladium, all of those are within there.
Yep.
But primarily gold. And what remains as a ground and a fact is that gold will remain a storehouse of value, regardless if it's trading at 2,000 or 1,000. It's still going to be a storehouse of value. So I think when we're trying to put it into an equation of what we should be doing with it, I think that it comes down to what the investor or that person, what is their goal? Is their goal to protect assets And possibly if the rug gets pulled out from underneath us and things really begin to come down, because I truly do believe that we'll have that perfect top, so that perfect formation of a turn. So I'm calling it the perfect turn. We have so many things out there. You mentioned several just now. We have interest rates. We got finally the market, it's going like, it is 2022. And the Fed said that they're going to start to tighten. Oh, I guess we better react. So we're seeing that reaction. And what I think it creates, Jim, is just noise. So we got all this noise surrounding us trying to make a decision about what we should trade, how we should trade, and where we should put our money. So I think it really comes down to, you've got to focus on what your mindset is. Is your mindset to protect assets on a long-term basis? It's going to provide you with a clear path on how you should trade and what you should invest in. If your mindset is that, well, I need to just kind of figure out a position for the next 3 months, it's a whole different game. Yeah. And it's a whole different strategy that you're going to employ. But I find that when we're trying to make those decisions, if we're getting surrounded by what I call noise, and that's going to be noise from CNBC, noise from, maybe you follow a particular trader and they're out there, blasting things out. These are things you can all take into consideration, but ideally, you've got to determine what your own strategy is and let the noise whirl around you, but make your decision and put things in place. And again, with the precious metals, they're a storehouse of value. So I have investments in gold, but they are extremely long-term, very, very long-term. And I'm not putting them there because I think that gold has a great return, or that I think gold's going to go to $3,000 an ounce. I'm putting them there because I feel that the rug gets pulled out from underneath me and the dollar goes to the sewer and nothing really has value anymore. What are you gonna have to convert back out? So to me, whether gold is trading at $2,500 or $1,500 or $500, it's still a storehouse of value. And if the time came where you needed that money to support your family or to support your extended family, or even to provide help, it's all going to be equivalent. You will have an equivalent amount of dollars to what's happening right then.
Well, there's four things happening out of the chute that I'm seeing, and I just wanted to get your feedback on this as well.
Sure.
The four things that are happening, and I have an account, obviously, so I'm seeing it in my own account. Energy, banks, electric vehicles, and let's go have some fun, which means your airlines, your cruises, your hotels, your stuff like that. Those are the four things that I have in my account that are actually screaming today. And basically, it seems like they look like the way people are betting on day one, that people are going to go out and have some fun, that the structural shortage of energy is going to make those things go higher, that the higher interest rates are going to make a lot of money for the financials, and that the Tesla situation is proof of concept that we are definitely going into the electric vehicle area. And ergo, NIO, Ford, and GM are running.
Right.
In sympathy, as well as Volkswagen, et cetera.
Right.
So anyway, what are you thinking as far as thematics are concerned?
I think that's actually a very, very good point. And I believe that, again, we're going back to, okay, what do I want to invest in? And I think that if you're picking up tips and you're looking at different sectors, like you mentioned several, energy being one, I technically probably would not trust or touch the energy sector. But I would have an interest in the EV sector. Yeah. And all the components thereof. Because you've got the batteries, you've got lithium, you've got all these different components that go in to put you into an electric car. I don't necessarily think I would be jumping into Tesla up $120. But obviously the market came in with the idea that, well, Elon Musk, he's all done selling his stock and now he's going to go have to reinvest that money. Where's he going to put it? Blah, blah, blah. I don't think he's putting it back into Tesla. But I see Tesla's value coming into the new year. How high you want to go and how exactly you want to invest in it, I'm not sure. I have more favorability towards Ford. Ford kind of plods along, and they've got their plan, they've got their strategy, and they are implementing that strategy. So one by one, they're gaining market traction, and so again, making a decision where you want to put the money, that's going to be more important. And also
on the electric vehicle thing, do you like CHPT, ChargePoint, and QuantumScape? Those seem to be the two.
ChargePoint presents a very solid idea, because if this infrastructure package gets off the ground, one of the things that is within it is putting charging stations across the country.
Especially for fleets.
Exactly.
Yeah. And
so here's another thing for Tesla. Of course, it's going to help, because part of, if we're going to go out on the road and we're going to travel and we're going to go visit all the US national parks, but we're going to do it in a Tesla. Well, you better have charging stations all the way across, or you won't have such a good time, right? So, but also in Tesla, Uber has jumped on the bandwagon, and they're bringing in Teslas, getting their drivers to go for Teslas by giving them incentive, so that they're doing their part for the greener America. So,
and Uber's catching a bid here today too, up about 4% or better.
Right. So I mean, we've got things in play, but again, if you're going to invest in them, I suggest that you invest wisely. I suggest that you don't just, I think that there are a lot of different ways to do it. I think because your caption here is the option professor, you have a lot of suggestions how someone can invest in Tesla, or somebody can invest in Ford, or in the EV, in those charging station stocks, the ones that are be profitable there, which I think can protect a position, et cetera, et cetera. So I think it's like, yes, they all make sense. But again, put your time frame together, put what you are feeling is going to be happening and what you're basing it on, put your strategy down, and then implement your strategy.
Do you like the banks, both regional and big banks?
No.
Okay, so you don't think this increase in interest rates that we're seeing is going to translate into more profits for them?
Even if it does, do you think that they're going to escape when the rug gets pulled out?
Yeah.
What about all those loans they have out there? What about all that consumer credit that they're holding? I don't care how much interest.
But would you wait for at least some sign of rain, or would you just on a perfectly sunny day start buying a raincoat?
I like that analogy. I would be buying the raincoat.
Okay. Yeah.
And let me just fill that in just a little bit, if I may.
Sure.
The thing is that when I just recently, and I'm going to update it again, but let me just put this out to the monthly maximum chart for the S&P future. These red marks, those are cycle degree moves. And I've got one above that is a super cycle degree move. Now, if you go back and you take a look at it's the longest term chart you can get, and in the SPX, you're going to go way back to like 1930 or maybe even before. I don't remember exactly, but that is suggesting that what we are cruising up to, it's not over yet, is a super cycle wave 3 top. And on a cycle level, it's going to be cycle wave 5.
Yeah, because it's when you go with the trend, it's a 5 legs up, and when it's a counter trend, it's a 3 leg down, correct?
Right. So on a cycle level, cycle 5 would complete that super cycle wave 3. So
and then there'd be a 3, and then there'd be a 3 waves to the downside.
Yes, but 3 waves of super cycle degree,
which means they'd be large,
very large. I mean, let me just tell you, if I was looking at the NASDAQ, just for example, I know we're talking S&P, but I was looking at the NASDAQ, and it's also running through a cycle degree advance, and it's now getting up to its endpoint for cycle wave 5. But if we go back, let's just take a peek at what happens at these major highs. Cycle wave 2 topped in 1987 for the NDX. And by the time that cycle wave 2 completed, the NDX lost 40% of its value. but that only equated to 88 points at the time. Still 40% of its value. Then we had a cycle wave 4 correction, which completed in 2002, right along with this one. And then what then proceeded was 2002 would have been over here, and the 4. For the next 6 years, the NDX lost 83% of its value. Okay. And that equated to 4,075 points. Now, super cycle wave 4, which I am expecting at some point to begin in 2022, if I use that same band, that same percentage band, I would predict that the NASDAQ could lose 90% of its value. And that's not going to do anything, but I want to just show you what it'll do. It's not going to do anything but bring it back down to here. 795. Under an Elliott guidelines, a corrective wave, so if I'm talking super cycle, that corrective wave, that wave 4, should find a bottom, a low, at the terminus of the 4th wave of one lesser degree, that's this one. So you already walk in going like, well, it looks like we could get down to 795. How long is it going to take, Michael? Well, it's not going to happen in a month. It's not going to happen in a year. If it took us 20 years to get up to that high, it's going to take us a long time to get back down. So lots of trading opportunities, lots of positioning, lots of different things that can be done. Again, set your mindset, get your mindset correct. And stop the noise around you, because that's going to distract you and it's going to delay you and it's going to derail you. Because while this is all happening, there are still going to be people that because get this, if I take the NDX all the way down, let's do it to a daily chart. This just finished an intermediate 3rd wave. Now remember, we're in a cycle 5. Within that cycle 5, there are 5 waves of primary degree up. Within that primary degree 5th wave, which is what we're in right now, there are 5 waves of intermediate degree, which we just completed the 3rd at that all-time high so far at 16,768. It's actually a little bit higher than where I've got it marked. So I just think we're just, the wave 4, which I got there, could be right there. If that's the case, we're beginning a rally, which probably should take 3 to 4 months. 3 at a minimum, I would think, to get us up to that all-time high. Then we start the next one. So again, putting the mindset on, how do you want to invest? If you're investing for the rug to be pulled out, you better be careful, because you're going to have to go out long enough and determine what it is you definitely want to put your money in. Right. Because you're going to have to sit out a rally to new all-time highs, and not just in the NASDAQ, but it also would be in the S&P as well.
Well, there's theory and then there's reality. And obviously the theory is, and I happen to agree, that there is some very, very large volatility ahead of us. Reality is that's not happening right today. So I was wondering if we could go through, if you wouldn't mind, can we go through some of these stocks that are in these sectors and see what they look like technically? Because on some of them, they seem like they could be just beginning something.
I agree.
Let's start out with energy and start out with XLE. And see what it looks like to you. Because XLE to me, it needed to get above 56 to get really, confirming some stuff here. But it does look like it's on
the hourly chart. That's a super bullish bar right on the open.
Yeah.
Very bullish bar, and we're getting their follow through. Yeah. So actually, energy's not looking bad.
What about SL? Let's look at some of the other ones internal. SLB.
I want to go up to the daily, because it's giving us a little clearer picture.
Oh yeah, sure.
Yeah. Okay. So we've got a couple of things going on. On December the 20th, it gapped down, but then it filled the gap.
Yeah.
So this is a very solid move. I would say that's 1 or 2, and we're starting in a 3rd. Yep. Eventually, on an energy basis, it's going to end up above 59, maybe get back up to 60.
Yeah, it looks like that to me too. What about SLB, which is Schlumberger and Halliburton, HAL? To me, they're just going.
They do, but Schlumberger is a little bit different of a picture, and I'm not sure why. Could be exactly what they do. You know,
Well,
what
they're
they do
into
provide
exploration. They're
energy-wise.
into exploration, and obviously since we have a very tight situation on oil, somebody's going to start betting at some point they'll start exploring.
That's true. I hear you, but again, Schlumberger's products they're actually drillers.
Yeah, drill bits.
Yeah.
Yeah.
So how much drilling are we going to do? And I
Well,
think
if
that's
we go
what-
to $100 crude, they'll be doing a lot.
I don't know. I don't know. But see, so that's the thing. I think
Yeah.
right now, what I can see here is off of that high as an Elliott 5 down, and I'm on the daily screen, the daily chart. That's 5 down. This appears to be 3 up.
So it still could go a little bit, but it may not blow out
absolutely
the
can.
highs. Yeah.
It absolutely can, but I don't see it coming up to those highs.
But yeah, okay.
I see it breaking. Well, it already did, but you see how it got stuck right at 31.27?
Yeah. Yeah.
Yeah.
What
Major.
about Halliburton looked to me a little bit better. HAL.
Right. Same story.
Same
Look at
story
that.
though.
1, 2, 3, 4, 5, A, B. I think it's got a little bit more room, but guess what? It got up to 92. That previous high was 98, got stuck, drifted back.
Yeah.
So just to put it into like a clearer picture, yes, I agree. If crude goes to $100, it doesn't necessarily mean that they're going to turn up the drillers again and start drilling for more oil. I think that there's a glut out there. So I think that regardless of what happens to the price of crude oil, it may not. Yes, you're going to get people that are going to move in because that's what they expect. But be careful on your expectations. And if you decide that you do want to go into the drillers because you do feel that there's more upside, you can put your money on the line, but make sure that you put a stop. You don't want to get killed on this.
Yeah. And if this thing starts trading 24, 25, 26, then it would be off to the races.
Oh, absolutely. And you want to be in on that.
Yeah.
So consider your time frame and then consider your risk. And then
now
put the
another
two
one
together.
that's out there, which is another one like this, is Devon, DVN, and that's been a real winner for me. I got it at 20. It's already at 40.
Wow.
Yeah.
It's been a very nice winner for you. Now, again, what is their product? Are they drillers as well?
Exploration.
There you go. And I would put them higher on the list.
Yep.
Because again, if we really don't get into a glut and we need more energy, and Devon's doing it, I'm not sure where their exploration is coming, but we still got to see what's going to happen in terms of what could put the kibosh on that. Is they don't let the Arctic drilling happen. They don't let that exploration go through in some of the areas in our own country, in our own waters, off the coast of California. There's a lot of stuff going on. And if that doesn't happen, then I see this thing actually sinking. And right now, my daily is telling me it's a little bit overbought.
Yeah, it is overbought a little bit. It's certainly not the buy.
kicker.
It's certainly not the buy it was at 20 and 25.
Oh my God, it was beautiful down there. You're absolutely right. But
let's jump over to financials. XLF will start out. That's the ETF, and see what those things are, because I've got a bunch of them that are just screaming here today.
As they probably should, because I think we get a lot of knee-jerk reactions to that. Higher interest rates. Well, they're going to make more money,
right?
And that's the noise that I speak of, because it
doesn't. Loan demand will pick up as these people spend all their savings, and they've got a house that's worth so much money. You got to figure that they're going to start tapping into personal loans against their houses, right?
They may, but I wouldn't use that as a reason to step in.
No, it's just another revenue source for these guys
right now. But again, maybe for 3 to 6 months.
Yeah.
While the markets go through their process of putting in that perfect turn, because here's something I'm going to toss out. I'm sure you already know this, Jim. There are 2 premises if you're stepping into the market that you must accept. Number 1, it's always perfectly priced. Number 2, it's always correct.
Right.
If you can accept both of those, you're going to have a good time.
Yep.
You're going to be able to trade, and you're going to just not go. You shouldn't go higher. You can't go lower, because the market is always correct. Always.
Now, most of the banks everybody knows is JP Morgan, Bank of America, Wells Fargo, blah, blah, blah. But there's a dark horse out there, Citigroup. And I'm wondering if you see this as a huge catch-up trade, because this thing used to be at 85 and you're picking it up at like 60, 59. I mean, come on.
Okay. Well,
so put up C.
XLF, I think, is running into some resistance right here.
Yeah.
If it can break it, so just to finish up with that for you,
Yeah.
if it can break above 40 is a nice a nice clear, like, get out of the way, we're
Yeah.
going. I would agree with that. Now, city. Wow, look
Yeah.
at that daily bar.
Yeah, I thought it was a steal under 60, so that's why I thought it was a good buy, and obviously it was. But I mean, is it going to be able to go back up to the higher levels? I mean,
It could, but I'm telling you, this is the daily, so daily charts can, we got to live by it.
Yeah.
Next hurdle is 64.40.
Okay,
That's where the 50 moving averages. You
right.
got the 200 above that at 66.95. So, 4 points though gets it up to 67.
Yeah,
And 4 points, hey, you can make a lot of money on 4 points.
yeah.
So again, if this is in your wheelhouse and you like it, figure out your trade.
Yeah, the price to book was like 70, which is extremely cheap.
Yeah, I mean, considering that it was all the way up here
Yeah.
Back in June.
Yeah.
And this really, yeah, actually, Jim, I'm going to go with you on this one and say it's good, because if I look at the pattern, that's the A, that's a B, and then we got 1, 2, 1, 2. It might have more downside, but I think it's going to be limited, because from here I can get 1, 2. Maybe not. I don't. Yeah, 3, 4, and then a 5. And these gaps are dangerous. But man, did they go back and fill that one?
It looks like exhaustion.
You're exactly correct, because look at that. Look at that bottoming tail.
Yeah. I don't think we're going to see 57 anytime soon on it.
I would agree with you on that one as well. Again, maybe not for the next 3 to 6 months. So I think I know I keep barking up that tree, but just make sure that you're putting your time frame into your equation of
Right.
what you're going to invest and how long you're going to stay.
And it looks like it could make a run for that 67 area where all that resistance is.
I don't disagree with you. Look,
Yeah.
this daily bar is extremely bullish.
Now the regionals, the regionals are also getting a run, and there's one NYCB that pays like over 5% dividend. NYCB, it's a regional bank, and it's called New York Community Bank. And to me, this one looks like a go. What do you think?
I'll let it pull back, but I agree with you. See if it can pull back to the 50 and hold the 50 at 12.35.
Right.
For certain, you want to make sure that it holds 12.12. So I would call it $12.
Right.
But yeah, you can start dipping your toe in here. And
looks like it might be setting up a reverse head and shoulders or something, huh?
Yes, I see that as well. But
Yeah.
I think you could start, letting it pull back is going to be important, because you're going to get better prices. But if I maybe get a partial position, if
Yeah.
they're going to keep pushing it,
Yeah.
and then add, but put your stop at 12. I wouldn't want to see it below 12, because that just kind of kills the whole pattern.
No way, which means it's a 50 cent, 40 cent risk, which is not too bad.
Not too bad. You're right. So this is a good one, Jim. I like it.
Let's roll over to those electrics. I got some NEO going, although it's in China. It does seem to be NIO.
NIO.
Yeah. It seems to be going someplace, but
But
it's got a lot of problems with China and stuff.
it does, but I'll tell you what, this is messy.
Yeah, it is messy.
3, 4, 5, to 3, 4, 5. No, it's a clean 5 down. Third
Okay.
extended. It's a
So
clean
we're done
5
with
down.
27 then.
I don't think it's heading for 27. I think that completed it, and now we got to do 3 up. At least 3 up, if not 5 up. So, and that, whatever it did on last week on Thursday, whoa, that's massive.
Well,
On
they
a
probably got
daily.
word about Tesla going to be announcing their sales or something,
I'm not sure, but I thought that was a very telling move. The pullback was your buying opportunity, and you had another buying opportunity this morning.
What about Ford, GM, and Volkswagen? Those are the other 3 horses in the race.
I have to tell you, Ford, I have always been a huge fan of Ford. I like picking up Ford below $20.
Yeah.
That's not going to be possible right now. Your last chance to do that was in November, excuse me, on the 20th of December. And it's been off to the races from there.
Yep.
This ended up being 3 down on the daily. That's setting this up. 1, 2, now we're in a third. It gapped this morning. which is not real common for Ford.
No.
So I like Ford. Again, you need to do your analysis and then pull some, and I'd go out to the weekly on this one so that you're getting a much larger picture to see this is 1, 2, and then 1, 2, 3, 4, 5, a 3, 4. That's finishing a 5. So again, this gets iffy because that 5 could take us up to 22, 23, 24, which is a great trade to participate in. But don't overstay your welcome. Don't think that this is bullish for the next 5 years. Remember that the whole bigger picture suggests that we maybe have 3-6 months of additional rally within the indexes. That doesn't mean that Ford's going to turn around and puke, but Ford is a member of all the indexes except the NASDAQ.
Right. How about GM and Volkswagen? GM? I think GM looks like it's really trying to get going here a little bit.
I know. I've never been a fan of GM, but
I know.
I think it's also the weekly. I think you got room. I think you can go to 65 pretty easily.
Yeah.
It should go up and take out that high at 65.18. And then you're looking, I'm just going to pull out my monthly. Wow. You know, this was the point, right? That's 2009. And this is the pandemic.
Yeah.
1, 2, 3, 4. It's still in a fifth. So I think maybe 65 to 70.
Yeah.
Yeah, doesn't look bad. But again, please contact Jim. He'll tell you how to use the options so you can grab that move.
What about these charging things? CHPT is supposed to be the cat's meow this year. CHPT.
Charge point. Okay.
Charge point. I mean, it's supposed to go bonkers this year with all the electric stuff coming on.
Yeah. Okay. We got 40.
But it's a new issue pretty much. You know what I mean?
Right. So I was just looking at that all the daily, and it's 48.70. I think was that top. Wow.
Yeah. Well, you know, they come out public. Every Tom, Dick, and Harry dumps it so they can make their millions. And now it's basically starting as a real company.
And it's coming off of a major low.
Yeah.
But let's see. When do they report next?
Not sure.
Yeah, whenever they're going to come out, that's going to be big. But here we are again. The end of last week, they did a major push. Again, that was the China and the Tesla news. But now they're following through. Next up, and this is on the daily, you're going to have a little problem. The hiccup could come at 20, 2010, somewhere around in there.
Yeah. Yeah.
And then you've got the 50 at 21.59.60, and then you've got the 200 at 23.27. I think it has a lot of potential.
Yeah.
On the daily, I might even come down on the 4 hour so I could manage what's happening inside this thing. You want to be able to count 1, 2, 3, 4. This is probably a little 5. Maybe it gets up there and gets above it, because that's today. Then it does 3 waves down, maybe comes back to 19.
Yeah.
And that's your buy point.
Another shot. Yeah. And how about QS? QS was another one that came out and went nuts. And then everybody sold it who could. And then basically it's another one that looks like, I don't know, maybe there's a future there.
I think, yes. And again, so much, I think it's going to depend if we can get this infrastructure package off the ground,
yeah,
the money committed, get it out there to bid for companies such as QuantumScape and the other one can put their bids in and they can start work. That would be, of course, extremely bullish for this company, and you're not basing it on hope of women or prayer. So I think that's what's happening now. Now we've got to move, but we have to have a little bit more strength in the movement in terms of, I got something to back me up. You know, they got a contract to go out and put X amount of charging stations in this state, and that state, you know, et cetera, et cetera. Now I got something to back it up. They've got revenue coming in. So it's not going to be, well, they lost 12 cents. Well, they still lost money. So until they can start booking some profitable moves. Now, you know, I do think it has a lot of potential. And yeah, that would be one. Now here again, this is a nice move. Here's the 5 up, then we did the 3 down, and now we're starting the 5 up, but it's getting stuck. So this morning it ran up, and then, I mean, for a $23 stock to drop it $1, or actually even 60 cents, it's only 5/8, so it's not any big deal. But yeah, I think that actually right now, if it holds the 8, this is on my hourly chart, 23 would be nice, but I don't know if it's going to come back there. That's a bottoming tail forming on the hourly chart.
Sure.
And you still got probably 30 minutes, but who knows?
Yeah, well, it's part of the battery thing. So, that's what people are,
But I think it's a good move. I
yeah,
don't
Charge
like the
Point
fact
and
that-
this one are both into the battery thing. You know what I mean?
Right, but they sold it. It went up and touched the 200 on the hourly chart, and
Yeah.
then they sold it. So there's still a lot of nervousness. Do they have options?
Not certain because they've been around so
Not long enough.
not long enough. It's not something I know. I'd be more of like a buyer and holder of the thing because it has value. You know what I mean?
Yeah.
In other words, you buy it at $20 and then you leave it alone. And the next thing you know, it
see-
has a big run when everybody starts needing their
It
stuff.
didn't quite get overbought, so it still might have a little bit of upside to finish up. Once it gets a little bit overbought and up here,
Mhm.
like on my stochastic, like 95 to 100, so yeah, I think you could buy it here and look to make 60 cents or $1 or whatever on that move. I think that works. But again, on long term, you might nibble it. buy
Yeah,
some-
it's not,
down.
it's not a breakout yet. No doubt about
No,
that.
no. not yet.
What is travel and leisure, is starting to pick up some steam. If you look at HGV, which is Hilton Vacations,
So
HGV,
Hilton Grand Vacations. And look what happened though. Oh my God, COVID.
yeah,
Remember what I was talking about? It's like what we're waiting for is that perfect turn. And what's going to create it is the accumulation of everything.
right.
I mean, I'm along everybody else. It's like, you know what? I'm tired of hearing about Omicron. I'm tired of
Right.
getting this voice and that voice telling me what to do. I'm tired, et cetera, et cetera. And I think so everybody's got this pandemic overload going. But the reality is that these companies depend on me and you and everybody else spending their dollars at our vacation. But if we're not allowed to go on that vacation, then they're going to suffer. But I do think that from what I'm hearing, more of us are getting fully vaccinated now. They consider that the double vaccine plus the booster.
Right.
Omicron may peak. Now we're talking here in California and even in the Bay Area, may peak within the next 2 weeks.
Hmm.
And that means then that starts to dark turn. Then people will start to come out again. People will start to book their vacations again. So again, the volatility is sitting in between the news stories. So what you really got to do again is block out the noise, look at things technically, look at things on a chart wise, look at things according to moving averages, make your choice. If this is a sector that you like and you believe that the recovery will continue, again, let me just put this out on a daily. Let's see where it's been. Yeah. This is an ugly ABC down, but it still is an ABC down. That's corrective in my mind. I would say that this thing ends up back above 56. I'm going to take it out to the weekly. Again, that's a daily chart. So you got to keep that time frame in mind. Actually, this high might be tougher to break, but I think it should. Even my weekly.
Well, once they say that freaking Omicron is peaked, believe me, people are going to be going someplace.
I do not disagree with you.
I mean,
because
you just saw over the holiday, even with all
Yes.
the canceled flights, there was 2 million people going someplace.
right.
They got
And
listen,
I
they
don't
got
disagree with you.
they got money and tick tock, they can see time
Well,
going by.
it's
They can
even
see
not so
time
much that
going
it's the
by.
money. I
and,
just
you know,
think that they're tired of not being a part of a family, doing things. We just get overload. It's like, I'm done. I'm going.
Yeah, exactly. Hey, there's a couple of you were mentioning a good thing, which is you can't just read stories and then trade just off the story you're reading. And 2 of them are the ones that I'm involved in right now, which is Carnival Cruise and Norwegian. So put up CCL and and then Norwegian, just to give an example of how, you know, everybody says you can't go on a cruise. Well, obviously cruises are going to get killed, right? Well, that's not exactly what's happening today.
Again, this is our weekly chart.
Yeah, go back to like a more of a shorter term one,
All right, I'll go to
like a
the
yearly.
daily. Let's go to the daily. 1, 2, 3, bing, 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 bing. This is actually putting in a correction very similar to the indexes.
Right.
Bounce it up and down, bounce it up and down. Look at
Right.
these moves, they're huge. So this is all news driven. Block out the news.
Right.
And so you are right, Jim, in the fact that if they really do get things under control with Omicron, then that factor into this perfect turn kind of fades out a little bit. And then the focus would be everybody's going to jump on a boat because we've got millions of people who love cruises. So I agree, but here's your hiccup. Right now, of course, it's getting back above 2178, 2180. Then you've got the 200, the daily 200 sitting at 2270. Now,
Right.
if it can clear all of this, this is one big 3 waves down. If it truly can get itself going and first of all, produce a clean 5 waves up on a daily chart, we're looking at some very positive things. And then you're going to want to scoop, scoop, scoop on that. So if it finishes 5 up, you're going to want to scoop it as it's coming off in a corrective move. So yeah, I would not disagree with you on this. Timing is going to be very, very important.
Now,
If
these metals that we talked about earlier, which
Yeah.
was XME is industrial metals. It seems to me like something's building there. And this would include your steel companies, you know, like Nucor and people like that. To me, this seems like something that it could be beginning a very significant uptrend. What do you think?
I do not disagree with you. Take a look at this. This is a daily chart. Look at the box this thing has been in since June, just like gold. Since June of last year, gold has been in a big box. So it's just going from the top of the box to this is the bottom of the box. What did it do? Went almost to the top, came almost to the bottom. Went almost to the top, came to the bottom. And now we're just running it up again. And in fact, off of that low, first of all, that bar on the daily, when you saw that, first of all, it came down within this bar. It broke the daily 200. And then by the end of the day, they had it back. That was a very strong buy signal. Very strong buy signal. And it came down again a few days later and did the same thing. Look what it did. It said, screw that. Came up, another strong buy signal. And now it's reacting to it. So if I had to say 1, 2, 3, 4, it's done the 5. I don't know if that 5 is over. It might be. In which case you should pull back, but there's where your low should be, 44.27.
Yeah.
So you're looking at the daily 20, excuse me, daily 8, or maybe down to the 2050, which are neck and neck here. I wouldn't want to see it below 43. Let's put it that way. I think that would destroy the rally and produce a stronger downside. But if it's reacting along with gold, gold's in the same box. Gold's in the exact same box. In fact, let me just, I know you want to move on, but let me just show you gold. Look at the box and gold.
Yeah. Well, gold is clearly in a deal where you got 1850 and you got 1750 and basically ballpark numbers. And as long as it's in that box, you know, you could do all your predicting you want.
Exactly.
Until it resolves that box.
Exactly.
You're taking a very dangerous position. Because if you started shorting gold here and all of a sudden they're going to take 2 years to make rates go up and these inflation numbers don't go away, gold could very easily get flying. On the other hand, the dollar is very strong. If the inflation is to roll over a bit, then obviously the need for stores of value are going to be less, and then ergo, you could get a very substantial break to the downside like we got in 2013. Can you go back to 2013? Can you get a 10-year graph up there?
I can.
Because I view the current area as looking exactly like 2013 in that in 2013, you know, we had made a high point,
right
and then
there.
basically, and then it had a nice break. And it had a break because it could not take out the highs.
Right, but here you go. Now I'm going to show you, because look at this. I've already got my Elliott ready for you.
Yeah.
That high was a primary third. So again, we're in a cycle wave 3 advance
Okay.
now. So primary's got to have 5 waves. Wave 1, 2, 3, 4. We're in primary 5. Within primary 5, got to have 3 inner waves up of, 5 waves up of intermediate degree, of which we have 1, 2, and 3. Now let me drop this down to the weekly chart. What this thing continues to play in here, that's 3. This is all a 4. So this box is just corrective. And as long as it's playing in here, I would continue to collect gold.
So
but
you're looking for a 5 wave, which would be something that could take out the highs.
Yeah,
Okay.
yeah, but that's a big picture. Okay, I was out of my max monthly. Now I'm at my weekly. On a weekly chart, it's going to play in here for a while. I think that the resolve is that it's got to come down. And still, Jim, it's like that same number you and I've talked about extensively, back towards 1600.
Okay.
Now, is that such a horrible
But I mean,
thing?
how would we go down there if we're supposed to have a 5th wave to the upside? Because to me,
it's
that
gotta
would
complete
be starting to do more like a
No,
3 waves to the downside or something.
it is going to be completing 3 waves to the downside.
Okay.
Don't forget, here's the A, here's the B. We're just looking for it to complete C.
Oh, I got you. And the C is the one that takes your dentures out a little bit.
It can, yes. Yeah, absolutely it can.
And if you break 1750 and you drop down to 1633, there's going to be a lot of people who own American Eagles going, these things got
Again, but
chocolate.
see,
These things got chocolate in the middle because there's really no value to what I'm holding on to here.
But I got to tell you, that to me, and I'm not trying to be insulting, that's noise, because gold will remain to be a storehouse of value. I don't care what price it's trading.
Oh
at.
yeah,
It's still
No.
a storehouse of value. So,
but you know, again, that is over 50 and centuries of time. It
it is
doesn't have.
absolutely true, but you must consider why you are buying or selling gold.
Oh,
What's
yeah.
your,
Yeah.
what's your purpose? If your purpose
Yeah,
is-
obviously your purpose when you're buying it and storing it should be one of insurance on your currency, insurance on your paper products. You know what I
right.
mean?
And in that case, now see if I think you would agree with me. If I'm buying it here,
Yeah.
but I think, okay, and it's telling me, okay, we should go down because we're already down $26 today. I'm buying puts. So I'm going to buy it and buy puts because I still think it has more downside. And I'm going to want to protect my position. I may add to it, or I may let this go down. My puts become valuable, but puts have some value. I might sell the puts and buy more gold.
Yeah.
There's all kinds of ways.
There is
but-
a little bit of a disconnect. I picked up Newmont Mining in the low 50s and it's up at 61. Now it's off today, $1, but it's still, when I got in, it was paying almost 4% dividend. And even now it's paying like 360. And it's down a bit. So I did some trimming on the rally, you know what I mean? But I'm still looking at it going, if gold's really, giving it up, and this thing's gone from 52 to 62, which is a heck of a move.
It is.
Why aren't more people hitting the exits? I think maybe because they're saying I'm getting 3 3/4% and I can handle bumps in the road. And the purpose I bought it for is the purpose you were talking about.
Right. And it hasn't necessarily broken that purpose.
Right.
So if the reason you're getting in has not been broken, then don't get out. I
Yeah.
agree with that. But again,
But are you seeing this as a temporary peak, you think, in Newmont?
It's kind of a strange pattern, but if I had to say off of that low, which was the beginning of December, that's a 1, that's a 2. Then we got a quick 3 maybe, or 1 of 3, 2 of 3, and we're in a 3 of 3, which case it shouldn't be doing this. Look, you've got that from New Year's Eve, where it left a bottoming tail, and then you got this one that's going to leave a topping tail. That's conflict.
So doing some trimming made some sense.
Doing some trimming made some sense, but see, it's holding the daily 4.
Yeah.
Like the daily 8.
So the
coming in
numbers,
at-
you wouldn't want to see it breaking. You don't want this thing with a 50 handle on it anymore.
No,
You don't want to, you want to hear about 59, 58 anymore.
I actually think 59 it has to hold because that's where the 200 is sitting.
Yeah.
So I would let it go down to there
Yeah.
and just keep an eye on the pattern and the price action.
Mhm.
You can get a lot of panic down there, but then
Yeah.
you get these moves that produce these tails at
Yeah.
the same time. So
The
yeah,
averages on this particular one doesn't seem to be as a value because we both know that moving averages work best with trending markets. And this thing's been going through these averages like knives through butter, both
that's
up and down.
true. But just remember also, they are in a trending market, but you're moving averages when that trend is changing
Yeah.
are going to warn you way ahead.
Yeah.
So, and that would be that it starts to break the 4, breaks the 8, breaks. This is what I find interesting. This rally got way ahead of itself because look at the position of the 50 and the 20.
Yeah. No, it's
Still below
extended.
the
Yeah.
200. So it got way ahead of itself. So this
And
might
your
just be-
stochastics are telling you that too, aren't they?
They sure are.
Yeah.
And really what it could be also telling us is like, well, you went up a little bit too high. Everybody got a little bit too crazy. So we got to pull it in here. And
Yeah.
that just gives the 50 and the 20 time to catch up to the 200.
Yeah. Yeah. Yeah.
And then we're off to the races again. So I'm
But
going
if gold going down to break the 1775 and 1750 area, this baby's coming back down.
it may be coming back down, but please pay attention to what it cost Newmont per ounce to get it out of the ground.
Oh yeah, no, they'll still be profitable.
Right. And
Yeah.
that's the major factor.
Yeah.
So you're going to want to be, if they're still going to be profitable, you want to be a buyer on the way
Yeah.
down.
Yeah. But the areas of 65, 70, and 75 where it came from is not going to happen if we go down to 1650 on gold.
But interestingly
Unless something
enough,
weird happens, and weird's a very bad thing to bet on, right?
true, but right, it reached its peak just before gold started to tumble in its box. Remember that box started on June.
Mm-hmm.
So here we have June. And so it's done it, but it's now treating it more like exactly what gold was doing. It's in a box. There's the bottom of the box. Here's the top of the box. If it comes back midway, then you've got another leg up. Again, daily chart. I don't think it looks that bad, but I want to see it pull back.
Mm-hmm.
And these are violent kind of moves. $1 or more in a stock, I think can be very violent because somebody just was hitting it like, I'm getting out. So just like,
Yeah,
you
well,
said,
I mean, guys like me who bought it in 53, 54, they made a nice little hit on it in a month, and why not grab some money, right?
I agree.
So,
What's next?
do you see any other markets that you think look interesting? Do you think the silver is just pulling back, or is there any value to the silver?
That's a tough call. I actually like silver, but like gold, it's getting caught up
Yeah.
in, itself. This did not make a new low. This is being left as 3 up. So yeah, silver runs the risk of coming back down to 21. And that does not necessarily mean that it's unhealthy. I think it's like when you go out and you start looking at, let's look at a 20-year monthly. That's unhealthy. This is not unhealthy.
Hey, one thing, why don't we just jump into the tech sector of the semis and that would be like SMH. And let's just see if the tech sector seems like it's going to be the thing to do here.
Wow, look at that chart. That's the monthly. Let's bring it down to the daily so that I don't get so excited. It is exactly like the NASDAQ.
Mm-hmm.
So there's your comparison. This was like the end of 3. Here's the end of 4, and you're starting 5. I'd be in it. I'd get it.
Yeah, exactly. Because
like people are looking at like 314. Wait a minute, that's all-time highs. It's like, so is the NASDAQ.
Yeah, they need the chips, and these guys have them. And the NVIDIAs of the world and the AMDs are sitting
Yes.
pretty.
And I think it's going to be, there's a very interesting article, and I can't remember where it was. But it's a very interesting article about the seriousness of this chip shortage and what it means for the companies,
Right.
the users of the chips, right? So you're talking Apple, Microsoft, all the computer builders, and smartphones, et cetera, et cetera. And it's a serious problem. It's a serious problem. And if we don't get it in line, then I don't think AMD can hold these higher levels, because what's going to happen is they're going to have to charge, they're going to have to pay so much to get the chips. But if nobody's willing to then buy the product at the end, who cares?
Yeah. My buddy lives in Phoenix. He says that building where we're going to reshore the supply chains for chips and all that is really going up fast. These guys are going to be up and running. So the future is going to be not depending so much, I don't think, on offshore places to get these chips that we need, but actually getting them. And reshoring is going to be a very big theme, which is also a negative for China. Because obviously the more we reshore, the less they have on their books. You know what I mean?
Watch how they cut their prices.
Yeah. Yeah.
It'll be interesting. You're right. But anything that can bring the chips down it's better for us as consumers, of course.
Yeah. And XLY is consumer discretionary, and that seems to be getting on the bicycle a little bit here today too. Oops. XLY.
Yeah,
we'll just leave them with that, because that's another one that has a lot of octane when it gets going. Consumer discretionary.
It gapped. Look at that beautiful gap today.
Well, people are out there spending their money.
They are out there spending the money, but that doesn't mean they're going to continue. They may run out really soon.
Yeah.
Oh, it's interesting. This is 3 down. And look at that. Look at that. Bottoming tail and then boom, gap.
Yeah.
Interesting. Very interesting chart. I'm not real positive on it because I think it's sitting up at the top and needs to pull back. If it pulls back and stays above 200, I might give it a shot. Try to buy it.
Well, if the consumer spending is going to keep going at the pace, then obviously all these companies and this kind of thing benefit.
Right, but I like the fundamentals because I think you have to consider the fundamentals, but when you're entering into something that is traded, look at the technicals. Base your trade on technicals. The fundamentals are there, but the fundamentals can change in a heartbeat. And then, wait a minute, I just bought that based on the fundamentals. Well, the fundamentals didn't come out.
Right.
The other side came out. But if you look at the technical picture, it's going to tell you better. This is my view. The technical picture tells you cleaner and better. Now, in the weekly chart, still has tons of room on the upside. Stochastics is now turning higher and looking pretty good.
Yeah.
This gap, though, troubles me.
Yeah.
Is it going to end up being an island?
Is it breakaway, runaway, and exhaustion, or is it an island?
Yeah, unfortunately, it's looking like an island. So let's see how it closes.
Yeah.
It closes at a higher level than.
And turnaround Tuesday tomorrow.
There you go.
Yeah.
So we'll see.
Well, anyway, one thing that you showed everybody here is that you can also, in addition to your own ideas, you can also help them analyze the stuff that they own and maybe get a different viewpoint on the technical picture of stuff they own. So explain to people how they can get a hold of you and, again, some of the things you can do.
Absolutely. One of the major factors that I'm changing and I'm going to be doing this year is providing coaching. That would be something where you could come in and you would, purchase a block and coaching, and then it's going to be tailored to exactly what whomever is purchasing that, what they want to know and what they want to work out. And so if it's going over stocks, it's going over Elliott. If it's going over what points are good, what to look for on a technical basis, perfect. I'm more than happy. My email is michael@mjf1partners.com. Just send me an email. I can help you out from there. If you let me know what it is you're looking for, what type of things you want to know first, I'll provide it. I always answer my emails. So again, that's michael@mjf1partners.com.
Okay, perfect. And as far as Option Professor this year, we have 3 collective 2 accounts that are available. One is on stocks, bonds, and options. The other is on swing trading, and the other one is on commodities and crypto. The commodity account since inception is up about 75% and compounding at 53% per annum. So we're very proud of that result. And again, if you go to optionprofessor.com and put your email in, we'll give you details on how you can get access to those 3 accounts. Again, I've been doing this for decades. I certainly have quite a bit of product knowledge, and I'm going to be putting specific ideas in each one of those accounts. So whatever your interest is, you can obviously get access to the one that you have the most interest. Again, stocks, bonds, and options, swing trading, and commodities and crypto. So there's 3 different ways to go. Optionprofessor.com, put your email in, and we'll explain how you can get access to our knowledge and experience. Thank you, Michael, for being here today.
You're welcome.
And
I just want to add one. I want to add one quick thing, Jim, for you. Apple just surpassed 3 trillion.
Well, I think they can buy lunch then.
Yeah, I'm up for that. Thank you.
All right, listen, guys. Michael, we'll have many conversations this year. This is the first of many. And David, I'm going to send it back over to you. And again, don't forget to go to the websites for Michael and myself, optionprofessor.com, and get our details and take it from there. Okay, David, back with you.
All right, thanks, guys. Yeah, a ton of good info to start off 2022. And so just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. You can also just go to TimingResearch.com, and at the top of the page right now is the post that will become the archive for this episode. And also, if you scroll down, you can see all the past shows and episodes and events there as well. So I just want to thank my guests again for today, Michael Filighera of LogicalSignals.com and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.